Good morning, everyone, and welcome to the European crossover webinar. And I see here that the, the SPOOs went to new highs again. Holy smokes, look at this. Right here. Finally got my issues squared away with the Bookmap. I think this VWAP might be wrong, though, because there was this break here. I had a problem, and it's been resolved. But I can always adjust the VWAP. Let me see, just to get this right now. Okay, that's truly where the VWAP is. I think that break in the here messed it up because I was thinking there's no way it could be there. And that same day VWAP right there where we're holding 29.05. I wish I'd been up at this time. Look, this came, oh, it's on the 30-minute. Look how that nagged that right there. I haven't looked at the chart, so I'm not sure what the significance was in there. Wow, that's at the 78%. Holy smokes. That was a good little area then. What I usually do is I'll look where we stand on the weekly. And that was my concern. If we closed up here, we could really push higher. So it looks like here's the weekly, the daily. See, nothing there. I'm seeing anything on either one of those specifically. So then we move to the 2-hour chart. And we did make it up here, but still nothing. Then when I go to the 30-minute, boom, you can see it right there. You can see, look how that's a key level. You see how the market came up here and we closed, and then we got above it. We kind of tested it, and see how we tested it. So that's significant. And then on the way back, look, you see here. So that 29.23 was significant, and then happened to coincide with the 78%. So no wonder, pretty good. I would have liked to have taken a piece on that. And just to confirm, let's make sure. Sure enough, was. Now we'll just move this here. You can see that. So it's pretty good confluence there. You see, that's a key level. That's why I have it in the dash dot thing. And you can see the 30-minute, that's been on a buy mode. See? NASDAQ, pretty good run here. Let's take a look at the weekly. We also came up here to 78%. Daily. Is there anything here? Right there. Let's take a look. Still even got above that area. Let's go move into the 2 hour. Yeah, key area there too. So we know our risk is going into NFP. Doggone, man. They're going to the freaking moon. Let's take a look at the 30-minute. But this is a true VWAP. That break messed things up. It should be fixed going forward. But at least I've got the VWAP here. And let me take a look at 2-day. I know you can set this up. I just have never bothered, so they'll automatically pick it up. But it's okay for now. Let's see. Okay, so there's 2-day VWAP, and here's same-day VWAP. This was an add-on program, so it didn't come on with it, but it's an excellent add-on. Because I didn't want to go with just same-day VWAP, but also you can choose it where I can go off an event. So there you go. It pulls up from this low, that low, from a significant low is the VWAP. So let's go on and take a look at the calendar. So we did get German export news, Spanish, that's industrial or what? Let's see. And then at 7 a.m. Eastern, because I'm in Central, so at 7 a.m. Eastern, Mexican data. Then, of course, Canadian housing starts. And then, as I like to refer to as the granddaddy, which is non-farm payroll. There's been some talk that this might be underreported because I think Neil Kashkari, Fed governor, was saying he thought it may be underreported because there's a lot of people that also may have just given up working or looking for work. I don't know about that part, but anyway, they're looking for 22 million. It's really just all about that headline number. All this other stuff, unemployment rate will be key, but we'll see what happens. We also have Canadian building permits, but also Canadian employment. Later on, wholesale inventories at 10 a.m. Eastern. Once again, I'm in Central, so it's 10 a.m. Eastern. Hard to believe with this, and that we're so high in the SPOOs, although, like I said, that came up to the 78%. Doggone. I wish I'd been up at that point. So we'll go in and take a look at the news. So the dollar eases, risk currencies gain on economic recovery hopes. I don't know about that, but I mean, the way stuff trades is just the way it trades. That's why I mean, a lot of times I focus just on what's coming up in the U.S. session. I do see what's coming on here. I would have loved to have taken the short against that, but we've talked about this, and I mentioned that ad nauseum in the chat room yesterday. Is you know you get those folks that come in on the desk traders, and they're just trading on momentum. That's why these shorter term charts and things like VWAP make such a difference, especially you're seeing the spoos, because there's no way in God's green earth that I would have believed that the spoos would have made it to this area, much less above 2,900, to all the way to 2,923. I mean, I thought it would have been something just to get to 61%. They made it all the way up to 78%. So that's what I'm saying is you have to focus on more shorter term perspective. And that the reason is because that's how the market's trading. If that's how it's trading, if it's trading from longer term views and stuff, you can hold them and all this other stuff. If they're trading on shorter term views, I think you have to just be focused on that. But anyway, that's my 2 cents. Anyway, on to the news. The dollar slipped on Friday as investors defied a broader sense of doom around upcoming U.S. employment data and found reasons to buy riskier currencies, with more governments slowly reopening their economy for business. The mood got a lift after China and the United States said their top trade negotiations had held a phone call and agreed to strengthen economic and public health cooperation. The talks come as tensions have flared between Washington and Beijing in recent days over the origins of the coronavirus. Broadly speaking, the market is looking to how the economies will normalize and be driven by news headlines. No one still has a clear picture on how much growth can recover in 2020, said Kazushige Kaida. Like I said, none of this stuff makes any sense to me, but this is how the market's trading. So if you want to try and make money, that you're gonna have to trade the way it's trading. You know what I mean? They got the ball, you got to play with their balls. So I mean, in a sense, you can't have your own biases on what you think a market could be or should be or whatever. Moving on. The greenback, excuse me, was undermined by a further hit to its yield attraction as U.S. money markets priced in a small chance of negative interest rates next year. The dollar index, a basket of currencies, slipped to 99.67. Euro edged up to 108.47. Aussie gained, nearing a 7th-week high of 65.70. Australia will ease social distancing restrictions implemented to slow the spread of the coronavirus in a 3-step process, Prime Minister Scott Morrison said on Friday, with the aim of removing all curbs by July. The dollar's retreat against riskier currencies reflected a recovery in risk sentiments as global shares rallied, with the NASDAQ now wiping out its losses this year. Holy smokes. On top of the aggressive monetary easing around the world, hopes of economic normalization are supporting the mood. Some countries in Europe and the United States are easing restrictions on economic activity. The greenback also was caught off guard as U.S. short-term bond yields hit record lows, with markets starting to price in negative rates for the first time. The possibility of negative rates is modestly bearish for the dollar, given limited market pricing to date. Ongoing concerns about the U.S. debasing the dollar. But he added, forceful and aggressive U.S. fiscal and monetary stimulus is likely to boost the recovery in the U.S. and pull in capital flow, supporting the dollar. Federal Reserve officials have said they do not see negative rates as appropriate. Still, the price action suggests some investors see a much worse downturn than that could force the Fed to become more experimental with its crisis response. Data on Thursday showed, we already know about the unemployment claims. Unemployment data due later today is expected to show a historic hit to the U.S. labor market. Non-farm payrolls are expected to have plunged 22 million in April, which would blow away the record dive of 800,000 seen during the 2007-09 recession. The unemployment rate is jumping to 16.1% in April. We saw that, which had shattered a post-World War II record of 10.8% touched in November of '82. Everyone knows it's going to be terrible, and people are focusing on the pace of rebound from here, said Ayeko Seta of Sumitomo Mitsui. But because this is an unprecedented pattern, you cannot find any historical example, and there's not even an example. Even our artificial intelligence cannot find an answer. And lastly, we do have a story on the Aussie and Kiwi. And then we'll get into the analysis. It's going to be pretty quiet until non-farm. Aussie and Kiwi to cool their heels after red hot rally. Analysts suspect the Aussie and New Zealand dollars have climbed too far too fast and a pullback is likely near term. Analysts polled by Reuters see the Aussie at 63 in 1 month, up sharply from 60.20, yet they would be down from 65.33, which reached in a blistering rally over the recent weeks. Currency hit a 17-year trough at 55.10. It then climbed 10 cents. We know all that. Near term, we see the risk that the markets falter and that a risk-off mood returns, potentially setting the odd back to 62 even, says Westpac economist Bill Evans. Coming data is likely to show economy suffering record contractions with unemployment spiking to post-depression highs, company failures. And see, here's the deal, and that's what I was focusing on or mentioning. You see, this is what's going to come, but that's not how the market's trading today. So once again, this makes a lot of sense in other times in trading, but for now, you got to focus on how the market's trading today. And that's what I think a lot of people have been stung because they've been too focused on the medium to longer term when these markets are going bananas on a very short-term basis. And you have to be ready to trade it on a very short-term basis. In this next stage, risk aversion is likely to take hold, and the odds still runs likely to go into reverse. The RBA said this week its forecast the local economy would shrink by 8%. Still, Evans said the global economy is slowing recovery late in the year, lifting the Aussie to 66 cents by December. New Zealand dollar also rallied off its lows. Analysts now say it's pulling back to 60 cents on a 1 and 3 month horizon before rising again to 62. So let's now go into the analysis for FX. So let's go into the euro. So we do have non-farm payroll. It's going to be interesting to see how we react. Now, yesterday we did go on and see a nice run back after we held the weekly support here at 776. We talked about the significance of this 776. See that right there coming across. The odd thing is we already know how bad it's going to be. I don't think we can be surprised. And the market's already risk on, so you can't even say, well, if the number comes in a little bit, whatever, it's going to do this or that. So I think it'll still stay within its overall ranges. So if we were to press a little bit lower, I would go here with 757 on the low side if the press those stops. And the range is going to be wider because we're dealing with non-farm payroll today. So that doggone spoo's all the way down to 2902. On the upside, let's take a look at a fib and see if we can see some confluence here. Line 23. Right here. See coming across here, that one, and that comes across here. So 893. Yep, 893. Once again, there's no real surprises, so I'm not really expecting to see anything go overboard. So that'll be it for the euro. Let's move into the cable. So interesting, we finished here in the middle of the range, and there was some news, but we're still staying relatively tight. We came down to this 2285. I think the risk is still for a bit weaker, so we're going to go right there. 2236. Once again, wider ranges because of non-farm payroll. We normally wouldn't have this wide. And the upside, I'm just looking for confluence here. You see that? And that's going to be 2485. Once again, wide because of the non-farm payroll. And things are priced in. So really, I'm looking at this stuff in an extreme as to where the market could potentially get to. And lots of times we'll have, I'll give you an example. So we would have, let's say, 845 and 903. But we pretty much already know what's going to be expected out of the non-farm payroll. There's not going to be any real shock. So I think we're going to stay within overall ranges. It'll just be whether they lay into it, 757, or we push the other way. I.e. now the cable 2045. I think that if they push that way, I mean, those are going to be the targets. So the analysis for this non-farm payroll is a little bit different from the other ones where we'll usually have two levels, let's say 857 and 912 or something like that. And you can see, but I think we're going to be, I don't see any big changes other than if the market decides to push in one direction. So the dollar strengthens, so then we're looking for a move down to 757 before we'll see reaction where demand comes in and see if they hold them or they don't hold them. So that's my take on that. But let's go and move into the Aussie dollar. So we did rebound a little bit here. Certainly bullish in Gulf, but because of the craziness we were seeing in equities, But it is what it is. It's saying so when we look for a a level, some kind of confluence, I don't see it's pushing all the way up here. To me, the way I look at it is we saw that 29.23 in the SPOOs. That's a key level, and it's also 78%. I think that the market is a fade against those moves. So, but once again, we'll trade it the way it's going to be. But that would be my premise coming in because we've gone so far. So the Aussie trades obviously risk on. I guess they can make a push. I just don't see them. It's already had a pretty good run. I don't really see it coming all the way back up here to 65.09. So to me, I was going to say 65.36, but they have been as high as what 65.44 or 46 off of this high right there. 65.39. Downside right there. I think that if it gets back down there, this is where you'll see some short covering, whether it falls through or not, which would be 64.10. On the Kiwi, you see that close there? And actually, that's a high. See this? I always like to go with the body touches right there. And that's where they went. They actually took it out by about a pip. It's going to be 61.33. Support. Once again, just like the Aussie, I don't think it would. I'm not saying it wouldn't go all the way down, but I'm saying you'll see folks stepping into cover, and that would be 60.13. I could see these pair back. We'll see whether or not they do it or not, but I would think Odd and Kiwi. Let's go to dollar CAD. They made it down here to 39.23. Potentially, this is where the market wants to go down here. And I think we have to allow it because it's not only U.S. employment, it's also Canadian employment. So that's going to be support 38.77. This one could be all over the place. That's probably going to be the best pair to trade. Not only because we have U.S. employment and Canadian employment, but because of this big old move. We were here, we pushed higher, and then we turn around and roll back. So this one is going to be a pair to, if you're trading, good pair to trade on or focus on. Upside is going to be this body right there, 40.43. Well, actually, you see this high right there? I mean, this low right there? There's that body, but look, right there, that one right there. Let's call it 40.53. go into the peso. This one is interesting. I think if it can break lower. Well, then we almost made it. We weren't that far away from it. I was going to go with that body touch. We'll just go with the level right here, which is going to be 23.59. Let's look at this on a weekly. Let's go right there, 23.35. If they dip down there, then we see some covering. Doesn't mean that we couldn't break beyond, but that's where we'll see some reactions coming in, I believe. Upside, right there, 24.43. Let's look on the daily. And that close, let's go right there, that 24.39. 24.39. Dollar. The 584 is still going to hold, and the upside, we had 660, and the high was 667. We're going to go with this level right there. 692. Tough seeing it go all the way up there. I don't see that. Right there. You see this bar that low? Oh, there's a 662. We had 660. The close on that day was 673. Let's go with that, 673. It's not too far from what we had. The high yesterday was 67. We had 60. We'll go 673. And let's go move into the cash dollar index. So we had 99.66, and the low's been 99.60. We're going to go with this bar right there and that low, which is, oh, that's previous support before, remember? 99.44. So upside right there. Par 31. One moment. Oh, that's one right there. That's actually par 32. I mean, the dollar index could turn around and take off if it want. But we'll go with par 32, par 32. Now let's go into the cross rates. So the Kiwi did obviously got some run on this. See this low right here? The low from that bar. And that comes in at 65.17. And this thing has been solid. Look at that. Solid up bar. You see right here with this bar, close, and that all come across. There's some good confluence. And that 64.34. 64.34. I'll move on to the euro yen. Get some water. Yesterday after I completed, I made some margaritas and golly, kind of kicked my butt. I felt like tired. And I even fell asleep. Uh, my goodness. I was just notating that Jane had looked for the boost to get up to 29.20. There was no way I would have thought that. But, wow, what a move. Getting to the euro yen. Let's see if we can see something intraday. Right there. I'll actually go with this close there and that low there. You see that? Good confluence, 1480. On the upside, right there, 1558. Well, we're still Philly farting around here at the 66.10 level. But then again, the euro was, I mean, the Aussie was stronger. I just don't see it doing much beyond that. I'm going to go with the low for the day and saying that that's it. 65, 60, basically 65, 65. And, and the high, see the lows here? And that confluences right there, that low. Confluences with this low. I mean, right to the nail on this low, which is confluence on this one. So we're going to go right there for the high. 67, 70 for resistance. Not too far from yesterday's. Let's go to the Euro Kiwi. Boy, still moving lower. The low here, 75, 76.58. The low on this day right there. I still think we can rebound. Let's take a look at the 2-hour chart. That low is 78.27. Holy smokes, this thing is really falling off a cliff. Jesus. There's resistance right there. 78.21. Man, something else. Let's go into the ASEAN. Gotta give it props. This doggone thing still kept pushing on. Let's take a look at our intraday. Right there. 69.74. I'd have to think once again that the high's already in. But there's your stretch, 69.74. We'll go right here for support if we do get that pullback. 68.88. So that's where we would look for them to step in and even up some positions. Something's not right on that. Yeah, okay. I didn't, I had not updated the upside. 77. And let's go to the guppy. I'm just going to go with the level. I don't have a lot of confidence in this one. 32.54. It's actually 32.55. What's level to level? 30.41. I think it said that didn't highlight the number. This guy, the squawk was saying, I think they pulled 60 billion for Bank of America in equities being pulled out of the market. Kind of makes you wonder how these markets are being able to run up to these levels. Let's go into the starting on. Just go with the level. I just don't see this odd continued strength up here. Which should be 89.62. Oh, that was 11 billion. They pulled. Hang on. Yeah, 16 billion in equities. Hang on. Bear with me. So investors pulled 16 billion from equities in the past week, largest redemption since March. Stock market slump. Investors show tech fatigue with 43 million pulled. Gold and high yield bond funds see the biggest 6-week inflows on record. Wow. Gold and high yield bond funds see the biggest 6-week inflows on record. And investors add 11.3 billion into bonds. Well, they did good on those. And on the upside, going right there with 90.40. I still think this thing has to go much higher. Let's go right there, 90.55. Support right there on the level, 89.63. So let's go and move into into the SPOOs and see what's shaking there ahead of MFP. Okay, so you still see this is on a good buy mode. What the heck? There we go. Personally, I think that any rallies back up here is going to have a tough time, but that 29.23, look at that, solid as a rock. And then on top of that, it's a 78%. Now, how much further could they push? Well, look here. That's key there, which is 29.24. That's not even much. $29.28. I like that. If we were to get a pop, I want to sell against 29.28. Just ahead, that should be some resistance right there. 29.14. Yeah, 29.14. Same day VWAP is at 29.05. As I mentioned, this hiccup here, it messed up my VWAP. See how it's all jacked up, it's down here. That's not correct. Uh, so same day VWAP is 29.05. 2 day at 28.79. There we go. That's another level right there. So it's be what, 29.16, 15.25. Lagarde has a speech today that's going to be live streamed, according to Squawk. Um, so you can see here 200 simple moving average here on the 1 minute. We've generated a buy signal on a very short-term basis here. And I just use this for just momentum on a short-term basis. If they're holding, all the indices are holding, let's say the 200-day and moving higher, I know that definitely easier to go with that. Hmm, 29.17. So we talked about that 29.15, so that would be key. And you can see this 29.30. Remember I told you any runs up there? So look at that 29.30 on a 2 hour. That'd be key. And I was saying any runs to 29.28. I was looking at that on a 30 minute, but you can see that 29.30 on a 2 hour. Here's that 29.07. Hmm. Hmm. This 29.66 is 2066 is continues to hold really well. Look at that. So those are the ones to be focusing on. Well, we've already reached the top of the hour, so good luck with everybody, and thanks for joining us here on the European Crossover webinar.